Hey, Robin, how you doing? Doc here from North America. Good morning, good afternoon, and good evening. I got that email. Thank you, Robin. Um, you know, I keep on hearing. Maybe because I was dealing with a physics question this morning, and at the same time an economic question. So it was like a combination of both. And so maybe I'm a tad sensitive to reality more than usual this morning. But yeah, I keep on hearing this same expression over and over again in my head. And that is, what is the definition of insanity? And obviously this is an Einstein thing, and because I was dealing with physics. And the definition of insanity is little audience today, I did not set up the pop-up notification. Oh darn. That's all right, Giannis. They'll see it on as we used to say, on the flip side. They'll see it on the video. That's all right. Yeah, but I hear something in my head. Okay, I was dealing with a financial question and I was dealing with a physics question from South Africa, and a really great thought experiment. But anyway, it really, after listening to the economic news and the data and so forth, it really, an expression or concept jumped out of my head. It was, what is the definition of insanity? Okay? And obviously the definition of insanity is to do the same thing over and over again and expect a different result. Exactly. And so when you look at, like, there was a question this morning, I mean just recently in the last few minutes, like, why invest in stocks when you can get 3% in bonds? And I thought to myself, as long as there's quantitative easing, nothing's going to change. That fits the definition of insanity. So there's no way things are going to change until there's no QE. As long as there's a QE, markets are going to chop around. They're going to find a way to go up. They're going to find a way to go down, but they're not going to be in any real dire situation. Even the worst of times, when we saw, the stock market drop, 50% over a 3-week period, 2 years ago. No one really talks about it. They just kind of forget about it. They'll talk about 1987. They'll talk about this or that. They don't go, and the worst market we've seen in 3 decades was February and March of 2020. They don't. They just skip by it like as if it doesn't exist. So, you see the markets. We tune in this morning. You see the dollar index. The dollar index is lifting up. You see you see it on J4X. You see it on Chicago Quant there, and it's not budging. And why is it not really budging? No, it's why are they not driving this thing hard in another direction because of all the strange things that are going on? Well, because QE. QE is here to stay until it's not here. That's pretty much what it comes down to. QE is here, and that's what the what do you call it, the cryptos tell us all the time. The cryptos are always telling us that as long as there's QE, there's going to be cryptos, because cryptos are the opposite. I was talking with somebody yesterday about the idea that how the mayor of Miami is taking his pay in cryptos and has lost 50% of his income because he's cryptos are lower. And I keep on telling people these are not a stable type of product like a currency or something very solid where it's gonna have very low volatility. It's the opposite. And they're a new asset class, and that asset class is, we lack confidence in central banks and government. That's what that asset class is. There's bonds, fixed income, fixed income equity, which are bonds. There's corporate debt, which is stock, and junk bonds. And the cryptos are the financial class of, we don't trust central banks and the government. That's what that is. And so to pretend, to pretend that things are going to change until they do change is ridiculous. It's the insanity issue right there and that. It just is. And so as long as there's, QE, well, there's going to be, we're going to have kind of a stable situation where, someone said to me this morning on a text, they were really surprised that the euro is sitting at 106. Is it sitting at 106? I thought it was at 107, but it might be back down to 106. Anything's possible. Let's take a look at it on J4X. And again, they're not going to let that, the idea, there's a couple of ideas of what quantitative easing is. But more than anything else, the simplest way to describe it is they are fighting for stability. Yeah, there it is, 106.70. Okay. Yeah, so that's what they're fighting for. They want stability. They, when the markets collapsed in the crash of 2020, just like I call the situation in Europe right now, the Central European War. When the financial markets collapsed in 2020, in February and March, and we had 1,000-point days on the Dow, up and down. We had 2,000-point days in the Dow. You would think that when people talk about bad times, you would think they would gravitate right to the previous one. That was 2020. But somehow or another they don't. We here at Dukascopy and Chicago Quant, we're talking about the V bottom. It was so clear that the math was going to turn. I was explaining how these hedge funds that used to sell free puts or sell puts naked, not free puts, but naked puts, and how they got crushed, and they were the ones hurting the market. And everybody seems to like it's like some type of selective memory. They kind of want to forget about it, like as if it didn't happen. But again, that's what QE is, and that's why we look at the dollar this morning, and we see that it's bouncing back up again after like a couple of weeks of getting sold down, and it's no surprise. Let's see. Here we go. Yeah. QE equals printing money. Basically, yeah, that's it. That's exactly it. There could be like these couple definitions of what QE. Not. You know how like you go in and look at a definition and they go like the 18th century what it meant, and the 19th century what it meant, or the 20th century what it meant. They have like 3 or 4 different categories in there. Well, it's the same thing. QE means that the central banks, they print money. And what do they do with that money? Well, most of the time what they do is they give confidence to the government that they can go do any kind of policy they want, and they'll basically finance it for them. That's pretty much what it comes down to. And at the same time, they're supposed to take that, what Bernanke in his graduate paper, the Fed chairman who introduced QE to the central bank, the objective was stability. And it was supposed to go away after like 1 or 2 years. You stabilize the markets, you marry and merge failing companies through poor decision making that was condoned by the government. Again, the government always gets its hands in there. It's always, playing with something, disturbing something. The government tells them, oh yeah, you can do these collateralized debt obligations, no problem. We can take the best borrower in the world, marry them to the worst borrower in the world, and everything is going to be fine. And then obviously the financial system collapses. So that's they should call it the Barney Frank crash. That's what we at one time, I think it was 1984, we had one, we called it the Ivan Boesky crash. So it should be referred to as the Barney Frank crash of 2008. He was on CNBC. He was crying. He didn't mean it. Things like that. Now you can't even find that YouTube whatsoever. He was talking to Maria Bartiromo. Let's see. One of the code words used not to freak out the populace. Yeah, don't scare the straights. Exactly, Janos. I like that. Metho 2000. I love QE. Oh, it's like the big sweet tooth, isn't it, Metho 2000? It is like the sweet tooth of financial markets. Oh, I've got a sweet tooth. I need more candy. But not too much. Aha. Yana says, I kind of see it as rain. If you have a bucket, gather water, If you're going to work without an umbrella, well, yeah, I totally agree. That's a good way of describing it too. So, I look at this morning, and you can see the. Let's go back to the. You can see the euro is moving back down a little bit here, and we're seeing the weakness on the J4X. But let's get back to the dollar index again. It's interesting. It's popping again on the upside. It's finding a way to lift. Let's see if we can find it. Where'd you go? Where are you? There you are. There you are, right there. So the dollar index is trying to bounce back up again. It's not necessarily like a V bottom. I think we came to the conclusion yesterday, and I really feel comfortable with it, is that there'll be some type of move somewhere along the line over the next few months. But overall, it's the summer doldrums in the middle of one of the most insane governments America has ever seen. Probably since as crazy as the Civil War of 1861. They could have easily bought they could have bought all the slaves without a war for half the price of the war. But they had to have the war. So, that talk about insanity. Instead, let's go to war. Let's kill a lot of people. And let's spend twice the amount of money that if we had just bought all the slaves, it would have been done and over. You don't think the South would have said, oh, sure, you're going to pay top dollar for all our slaves and then we don't have any anymore? Yeah, we can work that out with you. We'll find a way. Instead of, we're going to take them away from you for free, and you're going to lose your equity. So very unconstitutional. But end result is we have now a government that makes the Civil War look like like it was a done on the cheap, like it was done for free, when in fact we lost enormous amounts of, Americans. They spent the year before the Civil War. The budget was, I think it was $54 million. That was the budget. Over the next couple years, the budget went to $5.2 trillion. Okay? Or no, I'm sorry, billion, not trillion, billion. $5.2 billion, all right, over those years of the Civil War. If they had just bought the slaves back at top dollar, they would have only spent $2.5 billion. Wouldn't have disturbed the Constitution. And things would be better today. We wouldn't see all this crazy taxation that we see in these career politicians. So, yeah, this now is as insane as that. That's exactly what. As a matter of fact, the numbers probably fit. We went from a budget of $4 trillion to a budget of $11 trillion. It almost fits perfectly, the same craziness, Let's see, a good trader just catches the moves and does not take it personally. Exactly. Although the current QE is hurting the average people, it's hard to remain neutral. Oh, no doubt about it. No doubt about it. That's so true. So, in the end result is that I've really gotten to the point now where I'm convinced markets are going to be as odd as they were of February and March of 2020, but it's going to be the reverse of the volatility. It's going to be without that volatility. So we're probably going to be trapped in some type of triangle where we barely ever... I'd be surprised if we take out the lows. And obviously we're not going to take out the highs. But there's potential to do both. There's potential there more than usual. Okay? Solely because if the elections turn out the way they are pointing, there could be a massive rally in many, many ways because they'll be able to supersede Mr. Biden's decisions 100%. In other words, a veto-proof Congress. A veto-proof Congress can stop Mr. Biden cold. Not a little, not a half, all the way to zero. Mr. Biden will be literally on permanent vacation for 2 years. He will not need to even show up because they can override his veto and just pass the law themselves without a presidential signature. So that's why there's a lot of interest and a lot of stagnation at the same time. I hope I'm making a lot of sense there. So anyhow, that's the definition of insanity. Doc USA, what is new? Let's see. What's new is what are we seeing here today? In the markets. The markets started off weak. They got weaker, and I forget what the rationale was for the weakness, but they got pushed down. No, it's not politics. It's economics, really. I mean, The markets did crash in February and March of 2020. They did do that. The quantitative easing is to give the government more money to spend, write checks. That's not got nothing to do with politics. I'm not saying I like Mr. Biden or I don't like Mr. Biden. I'm not, I'm just saying these are the mechanics. These are the physical execution mechanics going on. I mean, people don't want to hear it, but it's a fact. And that's what's making the markets move every day. And in this case, now we're at this enormous stalling point where we're not sure if it's going to keep on going on or if it's going to stop, which is a very rarity that, in the middle of a simple election or a midterm election like this, that our economic policies could dramatically change almost out of nowhere in the next 5 months. They could change like, wow, bang. Just like the situation with the Civil War. Just boom, all of a sudden, just a whole different idea of what's going on, reality-wise, physical reality. So let's get to the S&Ps. Let's check it out and see what we're doing there. Let's see what Mr. and Mrs. S&P are doing. And we have seen, what was it? I saw some interesting stuff this morning that put some pressure on it. I know what it was. There's more numbers coming out on the CPI, and it looks like it should start to increase again. That's what put the pressure into the stock market. Stock market was kind of firm yesterday. Started off a couple 100 points up, and then they knocked it down, and then it got going again. You can see here the high there yesterday, and then turned it into a red candle. We have it over here on Chicago Quant, right. There's the S&P again. We are flirting with the daily sell. And now, after being in a weekly buy just from last week, we are now rolling over again. The pressure is on. So I kind of think we're in a triangle that's going to carom back and forth. I don't really think we're going to see lows. I think we're going to see, because of QE, if there was no QE, then we would see lows. But with QE, more than likely, they're going to put the pressure on the Federal Reserve to print more money and so forth. Mr. Powell has come out and said basically, well, we're going to raise rates a couple months and then we're going to take a look again in September what we do. What comes there? What's coming in September and October and November? Yes, that's right, the election. So it'll be right on the cusp of 2 months before the election. You think they want to raise rates again in front of the population? I doubt it. Target announced today that it is reducing the forecast even more. Yeah. I mean, it's often the same. Yeah, exactly. I see what Metho says. 2000 is saying it's about the same. Exactly. Metho says S&P is in a range longer. Yeah, I think this is going to be very strange because I really think we're moving into like a 4-month range, which is real. I mean, like a triangle or a channel that's just going to bounce around. They may do some, some news might come out to be able to drive it to the lows, but more than likely they'll be bought right back up again. It'll go into the category of, I think we need to reevaluate in September just to see how things are working. Just like Mr. Powell said, he's going to think again in September and take a look at what the two increases have done of June and August. I guess it'll be June and August. I think it'll be June and August. There'll be the increases of a 0.5 percentage point. Will it have much of an effect? Having our sip of tea here. Will it have much of an effect on the inflation? Well, most of the inflation, which is, I want to say, is very strange. The inflation, to a great extent, a bulk of it is the oil market. And they want oil. The problem is that's a policy of of this administration. I'm not going to mention the name, but it's the policy of this administration. They want oil prices higher. I mean, he did no more than 2 weeks ago in Japan. He said, this is going to create the new reset to a green future. High prices in the energies will force. Now, what he did yesterday, he did an executive order to allow solar collectors to be sold to the United States from Southeast Asia with no tariffs or something like that. So, I mean, this is the reset of the environmentalists. They think that they can save our solar system because we're seeing all these issues that go on. The ice ages that are developing on the other planets out of nowhere in the last 4 years, losing a third of the atmosphere on Pluto over the last 4 years. The earthquakes that are shaking the heck out of Mars, which NASA told us no more than a year and a half ago that that planet probably wouldn't see earthquakes for another million years. So the whole solar system's having its issues from Earth. And I guess you could say save the solar system, stop Earth. I guess that's about the best way to go there. So in the end result, Mr. Biden is setting things up to make it a new green world. And they're trying to stop Earth to save the solar system. And that's pretty cool, Save the solar system. So we look at the what do we look at? We look at the S&P 500, and you can see the pressure on it. But again, we don't really see much more than that. Let's blow up J4X and just look at it in that fashion. Yeah, see how it came up here. Had this nice run, and this looks like a big A and a B and a C type of thing going on. I kind of think we're going to look like this. In other words, this is the basis thing. So we'll probably try to climb up into this area a little bit higher at times, come back down in here, all depending on news, and it'll all line up with the November election. I think that's how that's going to play out, just like it tried to do it here. And they did set new lows, and they made lower highs. And more than likely, it'll be somewhat of the same characteristic, but in the end result, this area here is probably the mathematical mean, somewhere around the 44,000 area, something like that. I think that's what makes sense to me. That's what the triangle or the mathematical mean to the hesitation that's going on in the market as we speak. As we see it and the actions to it. And again, watching that dollar index, all of a sudden, boom, popped right back up again. Why are the quants saying 4270? 4270. I have heard the number a lot. Currently, they call it the chop. Yeah, it's because the funds are, and the funds and the hedge funds are all, their analysts are all putting out they look at the earnings on the S&P 500. And then what they do is they say, okay, what is next year's earnings, what's next quarter's earnings, and so forth. And the earnings are not that bad with stock right now. Usually at the beginning of an inflationary period, stocks do well. And then the question is, what happens down the road from there? And so we're at a point now that most of the funds have brought their low end down to 38, I think it is, and their high end of 44 or something like that. So, I think probably, what was our low? Let's take a look at the physical low we had. Where's it at? Right there. Let's blow this one up and look. Whoop. There it is. So the physical low was right there, right? The 38. So they're looking at the range of it, and they're combining it with the earnings to the S&P 500, and that's how they do that. They do that range thing. They look at the earnings, and it goes back to, I guess, April of last year. You can see that somewhere around back in here. So they're figuring. I think usually when you see something like that, they find a way to go underneath it. Someone will do something stupid. We don't need to emphasize that fact. Washington is enormously stupid. So, we've gone into a weekly buy. And if this lasts just 1 week, then we got the shot again at going down, especially with what's coming up on Friday. If we're sitting at 4,000, what's 100 points in the S&P 500? Nothing. That's 1,000 points in the Dow. And the Dow just lifted 2,000 points 2 weeks ago. So, 1 week the Dow was up over 2,000 points. And, it was a 6% move. It's not a big move. The crash of 87 was a 500-point move, and it was something like a 30% drop or something like that. It was a big drop. They don't really like to talk about how big our indices are compared to the historical opinion they constantly give us. They want to tell us about the history of the market, but they seem to leave out the important fundamentals like the math of it. They just want to tell you about the date and the scary thing that happened on that date, but they don't seem to want to tell you that, oh well, the Dow Jones Industrial Average was trading at 1700 when we had the crash of '87. Things like that. And then when the crash of 2020 happened, it matched up to it pretty well, but they don't go around talking about it. They just kind of pretend like it was just kind of noise in the background. It's just the way it works, because the problem is that we had a V bottom and it recovered, and it was during Mr. Trump's year, so they don't really like that. Mr. Biden yesterday came out and told us that we were in a depression when he took office. We had growth at the GDP was growing at 6.5%, and he comes out and the White House puts out a statement that when Mr. Biden won the election, we were in a depression, and when they took office, we were in a depression and a recession and so forth, and we were growing at somewhere between 6.5% and 4.5% when he took office. So the highs was 6.5, the low was 4.5. Now we are minus, but somehow right now we are the best economy we've ever seen. That's what Mr. Biden said yesterday. So and the White House put that statement out. So it's just there's a lacking of math. A lot of lacking of math. So and you just gotta shake your head and go, okay, yeah, right. I myself am like Janos. I follow the math. I follow the facts. I follow the quants. Real math. Get in and out. If as a matter of fact, there's another thing going on in the United States right now that's really weird, and that is that the Securities Exchange Commission wants to change the way execution is. And I'm thinking, let's get rid of anybody who doesn't understand what an option or a binary is to be allowed to be a broker. So all brokers should have passed very discriminating tests that they have to understand what a binary is and a option is, and they have to be and it should be a time test. So in other words, if you ask them in 10 minutes what is a buy right and what's the risk of a buy right, they better be able to give you the answer in like a matter of like 1 and 2 minutes. It should be like 5 seconds. I can give you the answer in like 3 seconds. But if they want to change the laws on execution, then change the laws on who is allowing the execution. The brokers, really. So, but that's another one, Janos, that's going on in the United States. Really wild. Gefton is doing some really strange stuff there. That's got everybody kind of like, they get, this morning, all the people that I know that are, that I trust on the financial channels going, it's not broken. Why try to fix it? The SEC is working? Yeah, strange. They are usually in a coma. No, they're always finding ways to do something stupid. Between the Commodities Futures Trading Commission and the Securities Exchange Commission, they're always out there doing something that's politically motivated more than they are doing something that is protecting the population. They don't, making it harder. Can you imagine you're with a brokerage house? Can you imagine? They're going to make it even harder for you to make a market. It's going to be harder to execute customer trades. That's what they're basically suggesting. They want to make it so hard to execute trades that they're trying to force public to trade with public and get rid of the professional brokerage houses. That's great. And then what will happen is what? There'll be like charlatans or snake oil salesmen running the place, Because, no responsibility at all. That's what they're shooting for. Remove the responsibility of the people that they've put in charge. That's pretty much how it all works. Strange. They are usually they imitate work. To get a raise in the system. They're bureaucrats, exactly, and they're working for government, and so they have to do something to keep their day active. They have to look like they're doing something. They should when I was teaching in a in a faraway land, the school that I taught at, I was teaching math. This was back in the 70s. And they had a rock pile. Now, this wasn't a prison. This wasn't a criminal thing. These were not like, kids were put there for, for punishment. They were there to learn. But they had a rock pile. And if a student did something wrong, you could send them out to the rock pile and make them pick up the rocks and then move it to the other side of the campus, dump the rocks, and then load the rocks back up again and take it back to the same spot that they had loaded them, dropped them in, and reloaded them again. So, yeah, it's like, that's pretty much the way to describe the Securities Exchange Commission and the Commodities Futures Trading Commission. They basically pick up the rocks on one side of the campus, take it to the other side of the campus, drop them, pick them back up again, and then take them back over to the other side. And that's pretty much all they do. Anyhow, let's try to get more into the market itself, because today is a day of insanity. We've got lots of strange things going on with the government and all the news. Let's see. It is a big issue with the U.S. Your government employees always look for a better spot. Oh, yeah, I know. They torture us. In the case of Eastern Europe, a government worker is always a local who has to improve his surroundings. Sounds good to me. We used to refer to that as proof in the pudding. In other words, if you eat it and it tastes good, then it is good. But if you taste it and you spit it out because it's bad, then obviously it's bad. It's so true. All right, let's jump over from the S&P 500, which is, like I said, you can see it right here. It's weakening. Let's jump over to the let's see, which currency? Anybody want to see anything in particular? If not, I'll jump over to the Swiss franc, and we'll take a look at the euro, and we'll take a look at the other products. Anybody have anything out there they want to look at? We will do it. Let's take a look at the euro. That sounds good. Let's see. Oh, I like that too. This is because a bit of cronyism. The local elected government officials will pick locals over outsiders. Yeah, and at the same time, that's the bad side of it. But the good side is you can see it, and if you can fire them, it's great. All right. So the euro this morning, we saw that it's at 106.70, and let's just go back to it again. 106.70. Where are you, euro? There we are, up top there. And so the market is, they're trying. They really are trying. The euro is trying, but it's not doing too well because, again, it's the quantitative easing, taking control of the action. Now let's go take a look at the euro over on Chicago Quant, right there. You see we're in a sell today. We went into a sell a couple days ago, and then what was yesterday? Did it go into the buy? It went into the buy yesterday, right there, and now we're heading back into the sell. The weekly jumped in. I kind of want to believe that we're going to find a way to go up more than go down. I really do. So I would be somewhat surprised that they take it down to lows. I would think instead they would kind of bounce around more. But because of the CPI coming out this week, and it's not looking very good at the moment, we'll see how they play that out. So, we're in the buy on a daily from yesterday. We're in the weekly buy, and we're losing. See there's that 1.5 of our math. Once in a while, it has to go the wrong way, and now it's going into the sell. And we'll see how that goes. More than likely, it'll find a way to drop down a little bit more or turn around. We'll follow the math in the end, because the math is always going to be, prosperous overall, week in, week out. Soybeans. Okay, let's see the soybeans. They've been acting very strong. They're the only out of the three, corn, wheat, and soybeans. And Dukascopy does soybeans. Let's put them up on J4X. Right. Where are you, soybeans? There they are. There's that looks like the July contract. That could be even the no contract, huh? Let's see. Let's open that up. Alrighty. There it goes. And And there's the beanies. Where's the beanies? There's July beans. They're trading at 1701. Yeah, so it's the July contract. Because I think November's in the 15s. You see where November beans are. Novi beans are, yeah, they're 1539. Yeah. Okay, so there, Dukascopi's got the July beans. Let's try that again. July beans right there. And you can see they're still in that weekly buy now for a bunch of weeks. 3, 4, 5, 6, 7, 8, 9. This is the 10th week. And they went into the buy here in the 1650-ish area, 1625 area, something like that. And they've gotten as high as 17 and a half. They did it there too. They got up to what, 1734. And you can see the daily is trying to lift up now as we speak, but it's kind of quiet, you know. That is live there. I understand that Turkey and Russia and so forth are talking about creating a corridor so that they can export from Odessa. That would be nice. Let's see, what else we got to say about any of this? The beans, to a great extent, whereas wheat and corn are still feeling some pain, you know. I see. If you have a question, Doc has answers. Good one, Robin. I agree. Ask any question, because I like to get into a product, and you know, you have a product that you like to trade over there at Dukascopy, and let's take a look at it, see if we can help you out. From there, we're going to jump back to, I want to see what the Swiss is doing. Let's see what the Swiss is doing. I'm sure it's marching along just like the, not that one. Where's it at? Right there. I'm sure it's marching along like the euro this morning, feeling that pressure. Right there. There it is. There's Swiss. You know, Swiss has jumped into the buy there, and it's just marching up and not getting tricked. Now, the weekly did slide into the weekly sell last week right there. We should remove that drawing and put the line in there. I thought I did that yesterday. I thought I saved it too. Let's try saving it again. There we go. All saved. So you can see that the Swiss was not fooled by this action, whereas the euro was to a certain extent, because the euro actually found a way to go back into the buy there. And I guess that's because of the strength in the weekly. And maybe just maybe they don't really want to smack it down too hard. Now, whereas the British pound is flirting with the weekly buy this week, it did last week too, but failed at it. There it is there. There we go. So it's flirting with the weekly buy. It did go. Did it get into the daily buy? Got into the daily buy yesterday too. Did the same thing as the euro. And now what it's doing is it's playing with the daily sell, and at the same time, we are. Let's see. Oh, I see what we have to do. Put the sell in there like so, and then go like that, like so, and then. You can see it's now flirting with the weekly sell, daily sell. I'm sorry, daily sell with a red and a green. So the pressure's on there. Let's see what that looks like. We didn't even see what. Oh, let's take a look at Swiss too while we're here. There's the Swiss, just to give a flavor of it. That strength that's been going on for the last couple of days. Like we just showed you on Chicago Quant. Let's take a look at British Pound. There's British Pound right there, and it's pressuring itself down, down, and down. Again, you know, it just seems to be part of the process. Oh, there's another thing too that's got things a little dipsy doodle in Washington D.C. People have been comparing Jimmy Carter to Biden now. People that normally don't say things like, you know, like the mainstream news is starting to say stuff like that, and the White House is getting nuts over it. They are like really angry. So, because, I mean, they put out a press release yesterday. We have the best economy now than we've had in decades, you know, and so forth. Somehow or another, they are not looking at the first quarter negative GDP and looking like the second quarter is going to be negative GDP, which is a description of a recession. So, I don't know. What can you say? Something weird is going on, and in America, and everybody else is stuck watching it. I think that's the best way to describe that. All right, so there's the cable. Let's jump over to the Turkish Lira. Maybe the negotiations that are going on will help that out. That would be nice, you know. That would be really nice. Because I was really stunned and surprised and saddened by the fall of the Turkish Lira. I see diesel. Yeah, yeah. I can put something up on that. Here, let's take a look at that. Let's jump over to the energies. Energy. Let's see. Where is that at? Yeah, you got to put some fuel in the car, right? You're heading to where? Bulgaria? No, you're going to the Czech Republic, right? That's it. You need kroners. That's right. Giannis is going on walkabout for a couple of weeks. Let's see. What's next here? Where's that at? Right there. There it is. Okay, we got to change the contract in it. All right. Let's see what the contracts. We have to put a new contract in there. That was the June contract. Aha! There we go. We got an October. Cool. So we'll take a little further out look. We'll go with the contango in a sense. There we are. Well, it's in a weekly buy forever. You can see that stuff right there. Went into the buy the first week of January. And doesn't seem to be letting go. We went into a daily buy there. Or was it right there? It was right there. We went into the daily buy right there. And that's been an interest. And then it told you to take a profit. You can't get short, of course, because, you know, it's a weekly buy. Unless you're doing it in binaries or something like that. And then now it's jumped into a daily buy again. So, that seems to be the answer to that. Now, this is a back month. We could take a look at. Let's see. What's the next one? Would be July, right? So let's put the July contract in there just to take a peek at that. Can we get that on Dukascopy, Giannis? Let's see. I've seen heating oil. No, not heating oil. If we could get heating oil on Dukascopy, that's the same. That's the distilling product that they distill to make the diesel. Is heating oil and jet fuel, really, airplane fuel too. Yeah, exactly. Do they have heating oil on Dukascopy? There's gas, regular gasoline. They refer to it as gas oil in Europe, right? So to get it on Dukascopy, let's see. Oh, you would drive if you could. Ah, oh, oh, you're flying. Well, the plane tickets, I'm sure, are subsidized, so you shouldn't have too much of a problem. They use the heating oil, the diesel, the power airplanes and automobiles and trucks, or trucks more than So it's heating oil. It's all the same process. But let's take a look at the July contract. Format. There we are. Add. There. HO. There we are. Look up, and then we want to look at. So we're in June, so July will be expiring in like like a week and a half from now. So that'll be N, like in Nancy. I'm going to add, in case someone asks for this again, I'm going to add July, and then I'm going to add, let's see, July would be, then Q's, right? August. Let's find the Q's. There it is right there. This could be fun. All right, that's July. So let's see where that. Now, the other was trading in the $4 area. See the discount automatically? It's like 30 some odd cents. That makes more sense. No pun intended. There we are. Yeah, so went into the buy again right there. Did go into the sell. And jumped back into the buy right there. And still trying. Well, it's a little bit lower today. Went up for a day. So there was a little win in there. If you do good money management, as Robin always says, then what happens is that you catch that drive and then not give up that profit from there. So, all right. So there's the heating oil, diesel / what's going on now? What is going on there? All right. From there, where we were looking at. Oh, we were going to head over and take a look at the Turkish Lira and see what the Turkish Lira is doing. See if Mr. Aragon has gotten things straightened out a little bit here. So far, no good, but we'll see. All right, where's it at? Let's take a look at. We'll take a look at dollar Turkish Lira to start off with. Right there. Get it up on J4X. What did I do? I just disconnected something. There we go. There it is. Dollar Turkish Lira still climbing. They're starting to get up, heading towards the all-time high, 1677, and 18 is the all-time high. It's like 1.25 away now. That's going to be a bumpy ride, as they would say in Harry Potter. I think we're going to have a bumpy ride. And you can see there, it's it's moving up strong and steady. And look at the lines here. They're having battles. They want to go down and retreat, but this kind of perception of the mathematics, using these two to basically interpret what's going on is very insightful. One thing's for sure, even with the green line underneath on the Dukascopy, too much green to want to go short. See, just green alone stops you from going short. Let's take a look at it through the eyes of the euro against the Turkish lira. Right there. And let's put it up on Chicago Quant. Right there. That's the scary part, is that the Turkish lira through the euro is really popping. Look at that. The high is now 1830. The all-time high is almost 21. It's like 20.8 or something like that. So they are really putting a lot of pressure on the Turkish lira at this point. And obviously, even when he's talking about, he must be doing something. We'll find it out. In other words, it'll come out in the news what he's doing. Whatever he's doing that has disrupted the whole process, maybe they're not paying the puts. I don't know. I don't trade Turkish lira, we don't really see a lot of news. But maybe he stopped paying the puts. Maybe he never paid the puts. Maybe it was just lip service. Like, oh, we're going to pay the puts. You buy our currency, you hold on to our currency, and maybe somebody big tried to take their profits. And Mr. Aragon might have said, go fish. Yeah, maybe that's what's going on. We'll find out. As time goes on, the story will come out. And then we'll be like, wow, the math was right. We just didn't know why it was right. But that's, as one physicist said this morning to me about another physicist, why do you have to know why? Is that the words? Oh, why do you have to know why it works? Why can't you just take the math at its something? Someone was doing a great thought experiment this morning, a physicist from Johannesburg. He taught here in the States. He had his PhD from the States here. He's much older than I am. He's much older than you, Robin, too. Anyway, end result is that he threw a thought experiment out there. No one would answer it. I answered it. and he didn't understand why I used a particular mathematical setting, and he said, "I guess I'm stupid." No, he's stupid, And I said, "No, you're not stupid." It's just, and then another physicist jumped in and said his name and said, "Why do you have to try to understand why it works? Why don't you just accept the answer and just leave it at that?" So anyway, it's the same thing here with the currency. It's like we don't know why the Turkish Lira now is getting its head handed to it again, like it was right before January, before December, like before Mr. Aragon started giving away free puts for anybody who bought, or not anybody, but for people who bought the Turkish Lira. So the big question is that, if that's going on, that's what's going on. I mean, and if President Aragon has pulled those free puts away without telling anybody, then, matter of fact, somebody in the financial press might have said it, but obviously, they're not going to tell us about it, that type of thing. They'll hide it until they can't hide it any longer. And that's pretty much the situation. That's what I'm thinking. Because there's no reason for this thing to go flying up if you have free puts. Unless you can't find, or there's a punishment to the investor. If you buy the Turkish Lira and the government's giving you a free put to protect it, then why would you not invest there unless they're doing something else to take the put away from you in a different fashion, a tax or, a limit, a time frame limit that you can't move your assets in and out over some particular time frame, something of that nature. Something's doing it, that's for sure. And we were so excited here at the webinar. We were very excited that the government did that in January, and you can see when they made that announcement. Let's show you on J4X to start off with. When they made that announcement, they were using the dollar as the key, and we were talking about it going to 18. And we've been talking throughout that whole move that it was probably going to hit the 18 area. And when it hit the 18 area, now that's the euro against Turkish lira. Let's put the dollar against Turkish lira, because supposedly President Aragon used that to basically do it right there. It ran up to the 18, and they gave out free puts, and it collapsed dramatically over a couple day period. Just a monster move from 18 down to 9. It lost 50%. Dramatic move over a couple day period for a product. 50% drop. So that's what we're all talking about here for those that are not sure what we're talking about. And so when we look at it, through the eyes of what I call the local, just like Giannis was saying about the local, we look at the Turkish lira against the euro, which seems to be a more accurate reading of the currency. We're seeing a lot of damage going on here. It's getting beat up even more, and you can see some of the pops are really something. So obviously something has changed, and no one's reporting it yet, or we're not hearing it, or something of that nature. It's just not jumping out at us. It will. It always does. All right, from there we go over to the Canadian. Let's see what's going on in the Canadian. See with oil being kind of flattish, not really doing anything particular. Let's see. What else can we say here? We'll get this in a second. Where is it at? Right here. There's the Canadian. And the Canadian has been moving down. Obviously, oil's been moving up. That's usually the recipe. And now that today they're flirting with a daily buy. We did go into that weekly sell last week. So it's trying to flirt with a daily buy. Let's see what happens if it just goes up a few points and it rolls over again. Maybe it's just a profit-taking thing. Money likes to take profits. They don't have a choice. When you're managing... What's this? Something about the chat. Is there somebody asking a question and I'm not seeing it? Robin, is somebody asking a question? Janos, is somebody asking a question and I'm not seeing it? Robin, say hi. Make sure everything's working. So... Ah, just listening. Okay, good. Okay, so no one's asking a question. Okay, I just saw something tick away. I can't find it. That's the thing. It gave me the little symbol showing that someone said something, but I'm not seeing it. So it's just my machine being a little weird. But that's the whole issue right there. When we look at these things, the Canadian now making a little bounce. Oh, I always know it was profits. I've mentioned this yesterday. The way funds work is that when they have a portfolio, they have to keep their portfolio balanced. So in other words, if they have one stock or product goes up 2%, and now they have a 2%. Now they have it that now it's 4% of the portfolio. They got to sell that and get it back down to 2%. They reduce the amount of inventory they have, but they keep the equity. That's the name of it. So that's why you see buying and selling like an ebb and flow all the time. Is that funds have to keep their portfolios balanced. That's their job, and so that's how that works. That should be a title. That's a good conversation. Yesterday's webinar. That's what. Instead of the range being traded, I should have said basically the balancing of a portfolio, because that is really what goes on. The define. Tomorrow we'll talk about it more, but and we can label the webinar how funds balance their portfolio, because that's why you see the ebb and flow, the buy and sell that goes on day in and day out in the marketplace. Alrighty, we're going to get out of here. This is Doc from North America. Let's just double check one more time, make sure nobody's asking any questions, and if not, we will, get ourselves out of here. Oh, there you go, DAX, Metho 2000. Yeah. There's still. Let's go over and take a look. I don't need to run away quick. Let's go over to this. I'm going to close that. Let's open up the DAX. Right there. Let's close that one. And there it is right there. The DAX. Where's the DAX? Right there. You can see DAX is still trying to lift up a little bit in here. We're in a daily buy for a few days. It's just going flat. DAX is acting pretty well, isn't it, compared to, say, there's the Tech 100 is sliding into a sell here as we speak. When you look them through the equities, and then when we go over and look at it through, here's the S&P. You see it's starting to move. It's moving down more. Let's put our intraday up there real quick for you, just to accentuate the action itself. This is my trading page when I intraday trade. You can see there's a nice little pop here because we're getting close to the New York Open in another minute. But this is the S&P 500. It's been in a downwardly slope. Where's it at now? We're at 8. So we started the webinar right here. So it's sold down and lifted up a little bit, sold down, lifted up. So it's doing, and it had that nice little slide here, and now it's bouncing off of it. We went down to, was that 4,076, and now we're trading at 4,882. So 76, that's just 6 points, which is good size, And the action is trying to turn up in here. Yeah, I use it. This is an intraday. So I use a couple different gas lines for fun to keep a general idea of it. So I like the this one here is the which one's this? This is the, come on, spill it out. There it is. That's the gas 5, and then I use gas 3.5. I like gas 3.5. That's I like that a lot. And the black, how I have it as a blue line. Let's widen this out. You'll be able to see this. Right there. Instead, it's the black line. So you got your green and white like we usually have, and then you see it's trying to break down. Now, if this breaks down with it, then it's a good short. It usually works out well like that. Like this was a good short. It's a slim one, but it's a good one. Now this is in the buy right there already, and it hasn't really gone up any. I mean, it went into the buy at 82.50, and all it could do is get up to 83. And the market's going to open in a few seconds here now. There they go. Off they roll. Watch them fly. Now you can see we got just bouncing around in here. Let's see if we can get a sell signal out of it. That was pretty choppy right off the bell itself in the first few seconds. It's lifting again. So they did the classic. They took it down to 70 and change to buy it, and then they get the sellers to sell them something, and then they got a chance to get the 86, and there's 86. The high there is 87 now, and we're starting to flirt with a sell. Both of them. Now it's a sell. Watch them go. Fall, Shifu, fall. One more little dip down probably. There we go. Come on, you can do it. That's what the math is screaming. Now we're getting red and green telling us to take a little of the profits from here, or they'll slam it hard one more time. Either way, you take the money and run. Yep, they're turning right back up again. So that's the intraday trading. Whoop, back into the sell again. There's that low. Okay, and that's usually the first few minutes is something to try to stay away from. It's too volatile. I always like to go into it in the first 8 minutes. Like after 8 minutes, I jump in there and play it. Let's see what else we got going. There is the Dow Jones Industrial Average. It's down 254, and you see it's tried to lift up and trying to put itself into a sell, but not doing too good a job. And the black histogram is that little green line we normally the cyan color that we use. That's at 5. This is the 3-5 there. So, all right, traders, we're going to get out of here. This is Doc, and the DAX is acting pretty well. Let's take one more look at the DAX before we leave, since Meth 2000 asked for it. Right there. Oh, look at the Qs come back. How about that? And there's the DAXy. The DAXy is higher than yesterday, acting firm. All right. This is Doc from North America. We will see you all tomorrow, same time, same channel on Happy to Hump Day. So, what's this? Meth says we can look tomorrow. Yeah, definitely. $10 below the ATH, 10%. He means that's all right. That's cool. We'll check you out tomorrow, Metho. We'll go into it right in the beginning. We'll go out, take a look at DAX, and we'll talk about the portfolio balancing thing again too. Happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders.